Hello viewers, myself Nazia Hasan. I am an assistant professor at TMIMT Tirthankar Mahavir University, Muradabad. I welcome you all in today's session, which is based on a subject called cost accounting. In previous sessions, we have talked about various aspects related to cost accounting. We talked various basic concepts like what is cost, costing, cost accounting, cost accountancy. It was also discussed in the previous session that what are the basic differences between cost accounting and financial accounting and cost accounting and management accounting. We also discussed what are the basic elements of a cost on the basis of direct and indirect material, labor and expenses. We discussed what are the techniques of costing and what are the various kinds of overheads and their classification. Moving on further with the subject, we will discuss in today's session cost sheet, components of cost sheet and importance of cost sheet. Cost sheet is a very important document for any kind of manufacturing concern, and it has to be understood, prepared with utmost care and efficiency. So let us go with this. What is cost sheet? A cost sheet is a statement that records all the cost a business incurs from production to sales. All the expenses which are part of a particular product from production to the point of sales are a part of a cost sheet. A cost sheet, it records all the cost a business incurs from production to point of sales, and it is a formal document that helps in the price discovery of any product. A cost sheet contains various cost details relating to the production cost, allowing business to determine a selling price. Basically, a cost sheet is usually linked to manufacturing related business, and main advantage of cost sheet is that you can fix the price of its product and services, and you can compare 1 year cost sheet from the previous year cost sheet in order to measure the performance. And after comparing this, you can decide whether the cost of a particular item need to be increased or it need to be decreased. You can prepare previous cost sheets and analyze whether the company is going on a profit path or a loss path. You can prepare cost sheet using previous cost sheets or current estimated cost. A previous cost sheet shows you the actual cost incurred for producing, storing and selling a product. Using estimated values, you can produce a cost sheet just before the production begins. So, we can analyze a cost sheet is a very important document for any kind of a manufacturing concern. Components of cost sheet. As we have already said, when a particular production is going on, the product passes through various stages before converting into a finished product and reaching a point of sale. So it is very tough to analyze each and every cost for that purpose, for making the job easy of any sort of accountant or any decision maker. We have divided the cost sheet into 5 basic components: prime cost, factory cost, cost of production, cost of goods sold, cost of sales. Each component has different kinds of cost, and these costs can be analyzed in an easy manner when are categorized into different kinds of headings. Let us study them one by one. Prime cost. Any expense that are directly connected to the production process are referred to as a prime cost. It is also known as the first cost or a basic cost. So prime cost is a summation of all 3 costs: direct material, direct labor, direct expenses. Direct material is calculated with the help of the following equation: opening stock of raw material plus purchases plus expenses of purchases minus closing stock of raw material. As we have discussed in the previous sessions what actually direct material is. We have discussed that direct material is that sort of material which is easily identified in a particular product and easily chargeable to a particular unit of a cost. For example, leather in a shoe or a fabric in a garment. They are all called direct materials. When in any question direct material is not given, you can calculate the direct material with the help of the information given in the question. Opening stock of raw material plus purchase plus expenses on purchase minus closing stock of raw material. Next comes the direct labor. What is direct labor? Direct labor is a person who is involved in converting the raw material into a finished product directly. For example, carpenter, viewer, blacksmith, goldsmith, they all are involved in converting the raw material into a finished product directly. Next is direct expenses. Direct expenses are the additional expenses which are incurred during the production process. Direct expenses are those expenses other than material and labor, and they are a part of a prime cost. Direct expenses, chargeable expenses is another name for direct expenses. For example, equipment maintenance, royalty paid in mining, cost of patent rights, hire of a special plant for production, etc. These are all direct expenses. So, for arriving at prime cost, we have summation of three main direct expenses: direct material, direct labor plus direct expenses. Next is components of total cost, work cost or factory cost. All the expenses which are incurred on the factory floor are known as the factory cost. And after adding these factory overheads in prime cost, we arrive at a factory cost. Factory overheads are the expenses which are not directly related to the production but are essential. Factory overheads that are concerned with the production function. It includes cost of coal, lubricating oil, nuts and bolts, stationery used in the factory, small tools, salary paid to the supervisors and works managers and wages paid to the watchmen, cleaner, factory rent, depreciation on the plant, factory lighting and powers, repairs, etc. These are all factory cost or work cost. When we add these kind of overheads in prime cost, we arrive at factory cost. Another component of cost sheet is cost of production. Cost of production is the sum of factory cost and office and administrative overheads. It is also known as office cost or administration cost. Production cost is equal to factory cost plus office and administration overheads. Office and administration overheads are the indirect expenses incurred on general management and administration functions. It includes salary paid to office staff, managing director, and remuneration paid to the directors of the company. Stationery used in the administrative overheads, postage, rent of office building, office lighting, legal expenses, depreciation on office furniture and equipment, etc. When these office and administrative overheads are added to the factory cost, we get the cost of production. And this is also known as office cost or administration cost. Next is components of cost sheet is cost of sales or total cost. Cost of sales or total cost is equal to cost of production plus selling and distribution overheads, which is called total cost. Selling and distribution overheads are the expenses which are incurred on the marketing, selling and distribution of product. So any expense which is incurred on the sales of a product which is directly linked to the sales of a product is called as selling and distribution overhead. It includes the cost of packaging material, expenses incurred on advertisement, traveling expenses, carriage outwards, rent of warehouse, insurance of goods in transits, bad debts, etc. And when we add this selling and distribution overheads with the cost of production, we get the total cost. So we will again brief up what are the components of a cost sheet. First is prime cost, which is the summation of direct material, direct labor and direct expenses. Another component is a factory cost, which is a summation of prime cost plus factory overheads. Moving further, another is cost of production, which is a summation of factory cost, which we have calculated over here, and factory cost plus office and administrative overheads. Another component is the total cost, which is a summation of cost of production plus selling and distribution overheads. These are the brief overview of what components are included in a cost sheet. Moving on further with a detailed analysis of components of a cost sheet, we will study with the help of a performer of a cost sheet. How to prepare cost sheet? For the preparation of cost sheet, it is extremely necessary that performers should be very clear and understood by the viewer. People adopt different methods of preparation of a cost sheet, but a general method for the preparation of cost sheet is like this. Cost sheet for the month of, and we will mention the month, and for the of means the organization name, and for the month of, it can be January, February, March, or 1 year, or month can be day or something like that. You can write over here. We generally have 4 columns when we prepare the cost sheet: particulars, details, total cost and cost per unit. It depends upon the demand of a viewer or an accountant how he wants to present the total information. Some people do not include cost per unit. It is up to them. It is total cost and details. Details column, we will include the individual cost. Then we will do the total cost and then cost per unit. Cost per unit is arrived by dividing the total cost with the number of units. So let us start. First we will calculate the prime cost. As we already have discussed in the previous slides, that prime cost is the summation of direct material, which is also known as raw material consumed, plus direct labor plus direct expenses. The summation of direct material, direct labor and direct expenses is called prime cost. Direct material, opening stock of raw material, add material purchased, carriage inward, less closing stock of raw material, and finally we will arrive at direct material, or which is also known as raw material consumed. Then we will add direct labor and direct expenses, and we will arrive at prime cost. Next is factory overhead. After calculating the prime cost, we will identify that what are the factory overheads, what are the expenses which can be included in the factory overheads. Although there can be many expenses other than the expenses mentioned over here, but for the general understanding of the viewers, we have included some of the expenses which can be categorized as factory overheads, like indirect material, indirect labor, factory rent and rates, power and fuel, factory lighting and supervision, factory or works manager salary, factory water supply, factory insurance, factory stationery, factory cleaning, drawing office expenses, depreciation of plant and machinery, cost of research and equipment, other factory expenses. These are all added in prime cost. Then we will deduct any sort of scrap value. Means if any scrap value is given, we will deduct from the summation of these this prime cost and factory overheads. We will deduct this scrap value. After that we will add opening stock of work in progress, and we will deduct the closing stock of work in progress. So this is something new which has come up, that what is opening stock of work in progress and what is closing stock of work in progress. We all know what is work in progress is the cost of unfinished goods in the manufacturing process, including labor, raw materials and overhead. Work in progress are considered to be a current asset on the asset side of the balance sheet. But if we have a opening stock of work in progress and less closing stock of work in progress, that has to be adjusted over here. And finally, we will arrive at work cost. After arriving at work cost, we will add office or administrative overheads in it. Office or administrative overheads includes office rent and rates, office lighting, office stationery, depreciation and repairs of office furniture, office salaries, management expenses, office telephone and postage charges, legal charges, bank charges and commission, office cleaning, audit fees, office insurance, other office expenses. These are all known as office and administrative overheads. When they are added to the work cost, we arrive at the cost of production. And we will write this cost of production in a total column. In cost of production, we adjust opening and closing stock of finished goods. Again, this is something very new has come up for you, that what is opening stock of finished goods and what is closing stock of finished goods. Opening stock is the cost of inventory of raw materials, work in progress and finished goods that an entity has on its initial day of its accounting year. So we will add opening stock of finished goods and we will deduct closing stock of finished goods. And what is closing stock of finished goods? Closing stock of finished goods is an inventory which an entity has at the last day of its accounting year. We will adjust these figures of opening stock of finished goods and closing stock of finished goods, and then we will arrive at cost of production of goods sold. Again, I brief you up. First, we will calculate the prime cost. Then we will calculate the work cost. Then we will come at the cost of production. And in cost of production, we will adjust opening stock of finished goods and closing stock of finished goods. Then after adjusting opening stock of finished goods and closing stock of finished goods, we will arrive at cost of production of goods sold. Then we will add selling and distribution overheads, and finally we will arrive at selling and distribution overheads. Selling and distribution overheads, as we have already discussed, are based on the sales of a product, which means salesman salaries, salesman commissions, showroom expenses, showroom rent and rates, advertisements, sales office rent and rates, traveling expenses, warehouse rent and rates, warehouse staff salaries, depreciation, repairs of delivery vehicle, carriage outward, debt collection charges, other selling and distribution expenses. These are a part of selling and distribution overheads. When we add these selling and distribution overheads in cost of production of goods sold, we get the total cost of goods sold. After arriving at the cost of goods sold, we will be given in the question sales, and from sales we will deduct the cost of goods sold, and we will know how much profit or loss the organization has incurred. So this is how we prepare the cost sheet. For the convenience of the viewers, I again brief up you how to prepare the cost sheet. We will make 4 columns: particular, details, total cost and cost per unit. Individual expenses will be recorded in the detail column, and the summation of the main components will be recorded in the total cost column. That will make the analysis and understanding more easy. And if you want to if it is a demand of the accountant, or it is a demand of a decision maker that he wants to understand the cost per unit also, then we will include additional column which is called cost per unit, which is arrived by dividing the cost of a particular component by the number of units. So prime cost, add direct material, direct labor and direct expenses. In prime cost, we will add factory overheads. We will adjust the scrap value, deduct from the factory overheads addition. Then we will adjust the opening stock of work in progress and closing stock of work in progress, and where we will arrive at the work cost. After arriving at work cost, we will add office or administrative overheads. After adding work cost and administrative overheads, we will get the cost of production. In cost of production, we will adjust finished goods and opening stock of finished goods and closing stock of finished goods. We will arrive at cost of production goods sold. In cost of production goods sold, we will add selling and distribution overheads. Then we will arrive at total cost of goods sold. And from sales given on, we will deduct the cost of goods sold. Then we will arrive at the profit or loss of any organization. This is how the cost sheet of a particular entity is prepared. As you can see, cost sheet has served the purpose of the detailed analysis of each and every cost which is included in the production of a particular product to the point of sale. So it is a very important component and which need to be prepared in a very efficient and a presentable manner. Next is importance of cost sheet. Importance of cost sheet. After seeing the preparation of cost sheet, I hope you must be well versed. There is a lot of importance which has been held by the preparation of a cost sheet. Let us discuss the importance of cost sheet one by one. Reveal the total cost and cost per unit. It simply means the cost sheet provides data related to the cost incurred in the production of a particular product. This cost data provides both the total cost and per unit cost of the product. It provides information. We have seen each and every aspect of cost is covered in the cost sheet. So it is a very, very powerful tool for providing the information to any sort of organization. The cost sheet shows the cost incurred in the production of a product at every production level. This includes the cost of raw materials used, wages paid to laborers, cost incurred in the administrative works, and cost of selling and distribution. Next is determination of selling price. As we have seen, sales is calculated. If sales is given, profit can be easily calculated. So it provides a very strong base for the fixation of any sort of inventory management method or the fixation of a selling price. The cost sheet helps in fixing the selling price of the product. With in-depth information on the cost incurred on the production, management can decide the selling price for its product, through which it not only covers all its expenses but also earns an optimum profit. Next is decision making. Of course, when we have a very powerful statement which is giving you in-depth analysis for each and every component under different headings, so obviously it is a very powerful decision making tool for any organization. Cost sheet helps the firm in decision making. The cost data provided by the cost sheet helps in making a wide range of decisions, such as decisions related to purchase of raw materials and equipments, fixing of selling prices, choosing the best inventory methods for cost saving, etc. For any sort of methods or any sort of inventory methods, or for choosing any sort of raw material, or a decision related to purchase of any sort of equipment, machinery, these things can be in a best way can be analyzed with the help of the cost sheet. Tracking of expenses. The cost sheet helps in tracking the expenses incurred in the production. The cost sheet provides in-depth cost data from every production level. So, management can easily keep tabs on all the expenses. This enables the company to pinpoint the areas where corrective measures can be taken in order to improve the efficiency. Various expenses are recorded in a cost sheet, and the cost sheet provides the in-depth cost data. And with this in-depth cost data, management can keep an eye on every sort of expenses. It can easily identify which expenses are unnecessarily incurred and which expenses need to be incurred for improving the overall efficiency and working of an entity. Next is preparation of tenders. The cost sheet helps in the preparation of tenders. An estimated cost sheet is used to quote prices to the management. Cost data from previous cost sheet is used to prepare tenders and quotation and estimate price changes. So we can say cost sheet serves as a very important tool for the preparation of tenders, and estimated cost sheet can be used to quote the prices for the management. So with this, we are done with the very important session on a cost sheet. Let us revise what we have actually discussed. We discussed what is cost sheet. We discussed what are the basic components of cost sheet, which are prime cost, factory cost, cost of production, cost of goods sold, and cost of sales. We discussed what is prime cost, which is a summation of direct material, direct labor, direct expenses. We discussed direct material can be calculated with the help of opening stock of raw material plus purchases plus expenses on purchases and less closing stock of raw material. We discussed what is factory cost, which is a summation of prime cost plus factory overheads. We discussed the cost of production, which is arrived by adding factory cost and office and administrative overheads. We discussed total cost, which is arrived after adding cost of production plus selling and distribution overheads. We discussed the format of a cost sheet, which is again presented with the help of a specific format, columns and rows. Format can be followed as per the convenience of the accountant, but the format which we have discussed over here is particulars, details, total cost and cost per unit, in which I have shown where you have to calculate the prime cost, and you have the value of sale of scrap and opening stock of work in progress and closing stock of work in progress need to be adjusted. In work cost, we need to adjust, after work cost we need to adjust opening stock of finished goods and closing stock of finished goods. After that, we need to add selling and distribution overheads and arrived at total cost or cost of goods sold, and thereafter profit and loss value. We also discussed about the importance of a cost sheet. So with this, I end up the session. Thank you so much.